Tesla's first quarter delivery numbers have just come in, and I'm sure you've heard what those are, but just under 337,000, which is their lowest delivery figures since mid 2022, which is around 3 years ago. Now, analysts are saying this is a shocking result. It's terrible, blah, 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 blah. Estimates were between 360,000 to 390,000. It's way below what everyone thought. Tesla sales in Europe are tanking and they're a disaster. But at the same time, Tesla's stock price went up by 5% on the news of these numbers. So, what gives? Why is there such an enormous disconnect between what investors are thinking? I mean, clearly investors went, okay, this is good news. Clearly, Wall Street and all the media said it's horrendous news. Now, if investors had reacted in the way that the media have, I mean, look at these news articles everywhere. Tesla's a disaster. Their stock price is going to tank. They're finished, rah, rah. I mean, if investors had reacted the same way to the media, Tesla's stock price would have fallen by 90%, but instead it's gone up by 5%. How is this possible? Well, there's a bit more to these numbers, and I'll give you the real reason why. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Great to have you with us. Now, I made a video yesterday about BYD's new solar-powered home robot. It's going to cost $10,000 US. And I pointed out that analysts believe if BYD does pull this off, it could double or even triple their stock price. It's worth keeping that in mind. So why is it that investors are buying more Tesla stock instead of buying less? Why has the price gone up? Well, first of all, yes, it's true that Tesla's delivery numbers were not great. 336,681 vehicles to be exact. I'm sure if you read Electric, they'll have 100 articles on why Tesla is going to be bankrupt by next week, and all the sensational, dramatic stuff that we know and expect from those guys. And I'm sure many people will say, well, get out of your Tesla stock. Do it now, immediately. However, there was a news report today from several different outlets saying it looks like Elon Musk will step down from his position at Doge and leave the US government. Now, if that is true, then we could see a big change within a few months' time. But I don't think that's why investors didn't react negatively to Tesla's Q1 report. Now, I should mention as well, guys, that at the same time that Tesla has reported their sales figures, BYD's electric car sales actually rose to 24% more than Tesla's. 24% more than Tesla's. BYD is, based on sales, now unquestionably the EV king, even though it really hasn't been focusing on electric cars, it's been focusing on plug-in hybrids. But that's another story. Now, I should point out that analysts who are even Tesla bulls, even they are saying that, here's Wedbush. Wedbush are a massive Tesla bull. They're saying a disaster on every metric. So Tesla's performance is a disaster on every metric, according to Wedbush. Now, I call bullshit on this. I think that's a very emotional reaction. And the reason for that is a very good post by Joey on Teslarati. In fact, not Joey's post, but what Joey said, which is actually quite interesting. Now, Joey said that Tesla's energy division performed incredibly well with 10.4 gigawatt hours of energy storage products deployed during the first quarter. This was a 156% increase year over year and the company's second best quarter in terms of energy deployments to date. Only Q4 2024 was better, as 11 gigawatt hours was recorded in Q4. It's worth pointing out Tesla is making higher profit margins on energy storage than it does on cars. Tesla Energy is frequently forgotten about, he says, and not talked about enough. The company has continued to deploy massive energy storage projects around the world, and as it recorded 31.5 gigawatt hours of deployments last year, 2025 looks like it will break those records. And yeah, there's no doubt Tesla is on track to break its energy storage records from last year, especially considering some of the contracts that it signed over the last 6 months. In fact, Tesla now has a 2-year backlog for its energy storage division. It just can't get access to enough batteries fast enough, or at least build the battery packs fast enough. Although that may change now that Tesla has now begun operating its Tesla Megapack battery facility in China. Although energy performed well, many investors are privy to that of the automotive division's performance. This is where the concern lies. Tesla's numbers were weak. However, Joey says this: there's two very likely good reasons to why this happened. The first is Tesla's switch over to the new Model Y at its production facilities around the world. Tesla said it lost several weeks of production due to the updating of manufacturing lines as it rolled out a new version of its all-electric crossover. Secondly, Tesla could be facing some pressure from pushback against the brand, which is what many analysts will say. Despite the publicity of attacks on Tesla drivers and their vehicles, as well as the company's showrooms, it would be safe to assume that we will have a better picture painted of what the issue is in Q2 after the company reports numbers in July of this year. If Tesla is still struggling then with lackluster delivery figures in Q2 after the Model Y is ramped and deliveries are more predictable and consistent, we could see where the argument for brand damage is whether it's legitimate. However, we are more prone to believe the Model Y, which accounts for more of Tesla's sales, far more, and its production ramp is more so the cause for what happened in Q1. Now, I believe a lot of investors are, well, aware of this. They're aware of the fact that, yes, the new Model Y has been a big factor for sales declines, well, for a pretty poor number from the first quarter of the year, right? The truth is it was pretty poor. And really, let's be real though, in the third month of this year, when Tesla had ramped up Model Y production in China, it was the best-selling car in China. So it's worth pointing out that America is not the only location where Tesla's vehicles are sold. And Tesla has bounced back in some other places like Spain and Norway. It's also worth pointing out that investors are well aware of the fact that Elon Musk looks like he might step down from Doge. Now, if that happens, there's a good chance that Tesla will have a bit of a reversal. How bad is the brand damage though? What do you guys think? Let me know what you think in the comments. Now, there's one other reason that I think, and one key reason why I think Tesla investors actually weren't too worried about these results, and that is the future. Now, yes, I understand Tesla's car sales matter, but the truth is Tesla doesn't plan for its car sales to be the main driver of growth in the business, or to even be the main reason for the company making money in the future. Clearly, Tesla is planning on three sectors being more important, which are, well, this has been mentioned by Tesla many times. Energy storage division will be bigger than its car sales. Musk has said that himself on a number of occasions. 2, robotics. Of course, Tesla wants to sell robots. And, well, the global labor market is worth far more than the automotive industry. In fact, by a factor of 10. We're talking trillions of dollars. If Tesla can disrupt that market, then cars mean, honestly, it's barely even worth bothering to sell cars. But also, autonomous vehicles is clearly Tesla's, well, probably their number one priority at this point in time. If Tesla can in future deliver on those three sectors, continuing to grow its energy storage division, and thereby also it actually makes profits off those products ongoing into the future, like a subscription model. People are not aware of that, but that does happen. But if they can also at the same time deploy their robotaxis within the next year or two and actually begin building robots en masse as they said they would during the call yesterday, then you know what? Really, the car sales aren't that important. And personally, if it were me, I wouldn't be paying any attention to them. None. I really see very little value in the number of cars Tesla sells. Why? Well, I know Tesla needs to sell cars to make money, but the truth is Tesla is in a very strong financial position. It's probably in the best financial position of any car company, if you want to call them a car company, in the world. It has tons of cash and basically no debt. And it gets paid for selling cars from other car brands. I mean, it's made more than $10 billion simply from selling carbon credits. Tesla has plenty of cash, but the future of the automotive industry is dangerous. It's terrible. It's a race to the bottom. And the truth is, this will be fantastic for consumers, but terrible for the automotive industry. There's too many players, way too many. Everyone is saying this, everyone is in agreement. And the race to the bottom is something Tesla is going to be part of. They have been a part of it. Their prices are going down, aren't they? Constantly going down because of pressure from other companies, because of products improving, because of battery costs going down. Companies say, well, we can reduce our prices. And it is a constant Strain. Legacy automakers are feeling the strain. Look at legacy automakers, look at their profits. We're looking at record lows from legacy automakers. Why are they doing this? Why are their profits collapsing? Because they have to compete. They have to compete with China now. It's a totally different game. When have you seen the rest of the world compete effectively with China when it comes to manufacturing? China is building factories to build the factories to build the factories, robots that'll work in those factories. I think within a few years' time, most of China's factories building cars, the good ones, won't have people. They'll just have 99% robots. They won't even need to have lights in the factories. That's the future, using massive gigacasting machines that were pioneered by Tesla. Do you see the Japanese doing that? Do you see the Germans doing that? Do you even see Americans doing that outside of Tesla? I don't think so. So fighting for this segment, where Tony Seba even himself says that cars will go down in price to 5,000 US dollars, would be a fool's errand. And Tesla knows it has to pivot. If Tesla was stupid enough to prioritize just selling cars over everything else, I personally would be telling you and begging you, stop investing. Sell your shares immediately. I would be saying it is a critical, crucial error, because any company not preparing for the future is dead. They're already dead. I'm telling you it now. I've been correct on companies like Nissan, the Volkswagen Group, and I can almost guarantee you that many legacy automakers within the next 10 years will be finished, because they're focusing on how many cars they sell every quarter and how much profit they make in that quarter as well. They're not focusing on the future. Now, whilst these numbers for Tesla aren't good, actually, they're better than you think for all the reasons that I've mentioned. But do you agree? Let me know what your thoughts are, guys, in the comments, and I'll see you on the next one.